G'day traders, Mindset Reset, Free Cash Thursday. Today we're talking about the mind games of trading. The mind games of trading. So today, Thursday, I call it day 2 because Wednesday is the midpoint of the week, midpoint range of the week. Why is that? Because Wednesday is the middle day of a 5-day template. We can have measured moves, continuations. We can have parabolic reversals on Free Cash Friday, which is day 3, Wednesday, Thursday, Friday. Monday's our opening range. Friday's our closing range. Friday, Monday, Tuesday can be a trade setup. We can have different 3-day setups within that 5-day template. If we get a peak formation high on a Tuesday or a peak formation low on a Tuesday, that can start a day count. Day 1, day 2, day 3. Escalator up, elevator down, pump and dump over 3 days. 3 levels can be 25, 25, 25, 50, 50, and 50, or 100, 100, and 100. So let's get that out of the way first. Now, the mind games of trading are this. I can only suggest to you to understand how the game is played. And then you can develop if this, then that thesis scenarios. Nothing is absolute. Nothing is going to be for certain. But when you see certain behaviors over and over and over again, at the timings, at the levels, after major red news, at the high or low of the day, the game becomes simpler and simpler and simpler. And your hit rate, because of asymmetrical risk reward, becomes more consistent. Your profitability, your R factor, your profitability factor becomes higher or more consistent over time because you can manage to take losses. As I've talked about before, there are scalp type of opportunities, there are 5-star type of opportunities, and that does not diminish the value of the trade. If you're trading an account size of X amount and you're scalping, that can still be a multiple 6-figure income or 7 figures. If you're using your 5-star opportunities to make your significant 1-day huge gains, those are significant because those can be 7-figure years, even trading those once or twice a week, depending on the account, the size of your account. Now, the mind games of trading are this. Traders get caught into chasing moves or don't have the skill set or the awareness to understand of when to exit a trade or to lock in profits. They're always getting in and they want to hold on for a big move for pips. Whereas the skilled trader, the knowledgeable trader who's trading with size understands that this is going to be a nail and bail, or they're going to scalp and get paid on that trade. I'm taking the trade to get paid. So it's not about pips. That's one of the mindset shifts that needs to occur for retail traders if you're trading these types of markets. The reason why is because nobody gets a free lunch, and the market is designed to, in the midst of a winning trade. Now, I put the US Swiss franc trade up today to paint a very clear, demonstrable picture to traders. A buy low setup after 3 levels of drop. A great question. How do you define 3 levels on that particular instrument? 3 boxes, an upper box, a middle box, and a lower box. An upper quarter level, a middle quarter level, and a lower quarter level, which separated the Asian session, the London session, and the opening of the US session. But it was also underneath the high of the day from yesterday. 3 levels of drop, consolidation, New York Open, and a market that started to proceed back up towards the high of the London session. It was a 30 pip roughly range. We're in the middle of that range, and what I wanted to demonstrate and asking those questions of how long would you hold on to this trade? Where would you put your take profit area at? Would you preset a profit target? Would you give this trade a time decay factor? Would you just lock in what you had in a certain amount of time, or would you put it at your stop at break even? When would you put your stop at break even? And would you just walk away with leaving your profit target in place? Now, if you watched that or went back and looked at that chart, you would have saw a large bear candle down, which was a second thrust down on a 15-minute chart. We'll talk about that in a second. And then the market resumed its upward move. Now, the market is going to try to shake you out of a winning trade, scare you out of taking a winning trade. They're going to try to get you to chase a losing trade. They're going to get you to try and hold on to a loser. They're going to try and shake you out of a winner on the way to its profit target. So these are the types of mind games that you're going to be constantly dealing with around the time that the market is about to potentially reverse or continue a move, you'll often maybe see some volatility where they'll hold it down low in that 15-minute cycle or even on a 1-minute cycle, and in the last 10 seconds, 1 minute, 30 seconds, all of a sudden bring it up quickly back to close as a pin hammer in the direction of where that trade is now heading, because it creates fear and uncertainty in the trader's mind unless they have absolute certainty and unconscious competence, which is the ability to execute without fear, and because they've done it so many times repetitiously, and they have that skill set honed under pressure to be able to execute that trade, but also to understand as it confirms that behavior to add in. If it's a trade that you have designated as one that can add more size into, where to cut your loss or your stop loss, manage your risk, and also where to take profits. So gold is a classic example because the volatility on gold on a small time frame will scare traders out of taking a winning trade. It will get traders to chase a perceived move, get them in, chasing that wick, the movement, which is why I always keep saying to traders, timings, okay, levels, 3 levels of rise. Once I'm in the strike zone, it's all about the level. I want to get filled. If I'm at 70, if the market's trapping above 75, my worst case fill, depending on how that market's setting up in the timings, is that I want to get filled at or better than 75. It's the level. So traders are getting caught chasing a move early. Like yesterday, a trader mentioned to me they shorted oil at the New York Open. It was inside of the high and the low. Inside. And then New York opened and auctioned and went up in the first 15 minutes before the next 15-minute cycle started, popped the top, reversed, third hour collapsed straight through the low of the day. If you're inside and you're using an indicator or anything else, remember, when New York opens, you're either at the high, at the low, or you're inside. Now, if you're inside, you need to have a peak formation low or high already locked in, and the market goes back into that. That's the shortened W, the shortened M. The US Canadian dollar today, perfect example of that. Jammed back into the low. 9:30 New York Open, higher high. They jam it down into that peak formation low before resuming the uptrend. So these are the mind games that going back, and number one, you have to understand what a best trade template is. Whether it's day 1, day 2, day 3, day 1, day 2, day 3 on the backside of a week. We had Euro Oz, Pound Oz blowing off in the direction on day 3 and continuing that on Thursday, day 2 in the Wednesday, Thursday, Friday on major red news Aussie dollar, which then collapsed and faded back into that Asian session blow off. Mind games are this. The mind games are created by uncertainty. Your uncertainty as a trader. Traders that have developed absolute certainty around their templates, their setups, the timings, the understanding of what it is exactly what they're looking for, can flip through a chart and go, nope, 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 yes, nope, yes, nope. Then watch the behavior of price in that first hour. So here's a great example today. I went long on the DJ30 into the open of the session. Market blew up, exploded, I got in just prior to the open as it was starting to go. We'd already dropped down 3 levels, put in a peak formation low, and went sideways on the smaller time frame. Thesis was an explosion through the high of the day that could potentially go back to yesterday's New York session peak formation. Now that market did pin up into that. It went through the high and pushed into that high, which was a 75 pip range from 75 to 50. 3 pushes on a 5-minute chart. That's 15 full minutes to reassess the move. So again, remember, it did not explode through. NASDAQ, S&P in that first 5 minutes spiked the low and engulfed. 3 levels of rise. Now, a trader said to me they got scared and didn't take it on the 1 minute. As I mentioned to one trader, go and use your 15-minute charts on everything to develop your thesis and wait. Once you're at the high or the low, on the indexes, a 5-minute chart in most cases will avail you the opportune entry. Now, if you want to have a 1 minute and a 5 minute, understand what your thesis is. Today, when those 5 minute bars closed on the S&P and the NASDAQ, go back and look. 3 levels of rise. The first 5 minutes is the same as a 1 minute major red news candle at 3 levels of rise. First candle trapped the whole upper volume of longs. The whole upper level, remember, 3 levels of rise, 1, 2, 3, the whole upper level was trapped under the close of that bar. What that means is they're not coming back until they head down, because if they come back, they allow traders who are now potentially caught underwater to get out of a losing trade, and they are not going to do that. This is where the psychology of trading comes in, to understanding who's in the money when that market opens. If they go in a direction, if this, then that. If they do this, 3 levels of rise, I'm doing that. If price confirms and it starts to behave, it consolidated for the next 10 minutes before dropping. It dropped in the third candle, started to drop. Am I going to add into this? Is this market have a potential for maybe a range expansion? I don't know until it gets down there. I can take some off as it clears levels. I can take some off at the low, and it may leave a trailer, because this market may now have the potential to go on a range expansion. Now on DJ30, my long entry was the first peak. So it put in a high a day, and they proceeded to push back up into it 2 more times before collapsing. When? At the end of the 3-hour 12 candle window on 50-minute charts. 1 push, 2 push, 3 push, 3 hours, 1 hour, 2 hours, 3 hours, collapse. NASDAQ, S&P rolled over, worked the low before continuing lower. Point being is this: mind games. The mental skills that need to be developed come from creating certainty and clarity and understanding around timings, levels, behavior, price, and best trade setups. Whether it's a Monday, Tuesday, Wednesday, whether it's 3 levels of rise, 3 sessions, 3 levels of rise or fall for a session, parabolic opportunity, whether it is a day 3 breakouts, maybe a first bounce on major red news or first bar, whatever that is. Maybe it's a first red day, first green day. Aussie Cat, I got to go back and look. I think that was starting to play out as a first green day. Won't have to go check at the close. But these are all the things. So you can have the signal days, and then the template needs to develop. You can have there was a couple examples. I have to remember which pair it was. First green day on Tuesday. Wednesday played out as a bull candle but did not explode. But Thursday traded right down in, sorry, that was the US Swiss. First green day on Tuesday. I'll double check that. Yesterday played out and closed as a bull candle, not a huge range day. It dumped down today and gave a New York open low of the day, 3 push pattern, 15-minute engulfment, a 2-bar reversal, then a pin hammer for the explosive move back towards the high of London. So tomorrow may be a large day back through the high of the week. I have to go see what the close is. We can only ever have a thesis and then an if this, then that scenario. But if you're waiting for the timings, that is the key. I'm going to really, really reinforce this over and over again. There's lots of other trades, but until you master those setups and the high probability possibility consistency of those and the asymmetrical risk reward, 3 levels of rise or fall, parabolic moves, that's when you can look at other time frame opportunities, maybe in the gap or the high of the week, low of the week, or maybe 7 a.m. to 8 a.m. type of opportunities when they collapse before a session begins, those types of situations. But there are several ways to make money in the markets. But first and foremost, step back and look at the highest possibility / probability opportunities that are at the high or low of the day. New York Open if you're trading US session, London Open if you're trading London, and then as I talked about, that middle hour, Asia 8 to 11, so that 9 p.m. hour. Of course, you're going to see moves that take place at 8:15, 8:30. You're going to see moves that take place at the end of the 3-hour window, whatever. But the parabolic opportunities are what I'm referring to: peak formation, consolidation for either a continuation or a reversal trade, a session scalp or a 5-star opportunity that's all in because other time frame traders are driving that. So Simplest thing to develop the consistency and get the mindset right is that 9:30 high or low of the day. Now, if you and several traders, again, you're sitting back, it just takes so much guesswork and stress out of trading when you just sit back and say 9:30 New York's going to open, whether I'm trading the British pound, the euro, the Swiss franc, the DJ30, gold, or oil. I mean, they all moved today. When? At the New York Open. At the New York Open. So, as Paul Tudor Jones says, make trading a pursuit of pleasure, make it enjoyable, make sure that you're executing on a high probability / possibility edge, manage your risk, take profits. And if you're going to leave a trailer, if it's an opportunity that you potentially see as a range expansion, because now once New York's open, no more major red news on the schedule, everything's on the table for the day. This could go. How does it behave when it gets to the low or the high of the day? Am I going to continue to hold this? Is this an all-day fade? Thursday, all-day fade. Why is that? Maybe they're going to reverse and lock in the highs or lows in Asia, maybe trap volume, and maybe we're going to see a parabolic reversal, or maybe even again at 3 levels of rise, capitulation, no major red news on the calendar. Slight possibility we could see just a narrow range day play out because it's no major red news. We had a large move today, but we'll see when we get there as to how the market engineers those opportunities for us. Seek out the best templates on the day, no matter what anything else tells you. Look for the best well-engineered templates. Sit back, let the market digest the news. Look for high and low of the day opportunities when New York is about to open. So keep it simple, traders. And again, a few traders say, well, that sounds great. Keep it simple. All these 1,000 things to remember. High or low of the day, 3 levels of rise or fall, 25, 25, 25, 50, 50 or 50, 100, 100 or 100, depending on the instrument that you're looking at. And then 9:30 New York Open. Have a great day, traders. Congratulations to the traders that nailed it. I'm going to say in closing, there's lots of people who have messaged me and asked me about the month of August because other people say, don't trade in August, don't trade in August. I want one person to show me where we have not had 5-star best trading setup opportunity templates. We are halfway through the month, and this has been one of the most profitable months in the calendar this year. Have a great day, traders. Free Cash Friday is tomorrow. Bring your A game. I love y'all. Appreciate y'all. Have a great day, and may the markets go with you.